in Julius Caesar by Shakespeare, Brutus gave a speech in which he explains that there is a tide in the affairs of men that, taken at the flood, will lead to fortune, but omitted, it will lead to misery. This is an abbreviated version, of course, very much abbreviated. But basically, what he said was, at that time they were standing at crossroads, and that's exactly where we are now in the world, both financially, politically, and geopolitically. This is a very critical time. I've explained many times that we are at the end of a monetary era. Every single money or currency has gone to zero in history. Sadly, that's the fate of every currency. It's only one that has survived, or two you could say, which is gold and silver, because they're nature's money. They can't be printed or fabricated. Since 71, as I explained also very often, all currencies in the world have gone down 99% against gold. That means that they're on their way to perdition, sadly. But that's nothing new. It's always happened in history. Every government runs deficits, prints money, runs big debts and can't afford to repay them, and therefore they print money and the currency goes to zero. It's inevitable, and so it's happening now again. But this time it's going to be worse because it's on a global scale that has never ever happened in history before, and therefore it will affect us all in a major way. Let's just look at what does that mean, the currency losing all its value. Well, the government will explain it to you in a way they say, well, we have inflation, prices are going up. Well, that's a lie and it's a fallacy. Prices are not going up. That is the wrong way of explaining inflation. Inflation means that the value of your money is going down and is coming down very quickly. So just let us look at first the inflation was in the UK in the 70s. If you look at this graph, I experienced from early 1970s to late 1970s many years of inflation of over 15%. And during a 6-year period, as you can see in this graph, the average inflation was 15.7%. And that means that, during that period, prices doubled and the peak was 24% in 1975. I remember it well because my first mortgage, I think in 74, I paid about 21% interest on my mortgage. So that's inflation that governments blame on rising prices. They never ever admit they are creating the inflation by borrowing too much money and running deficits. And that's why the value of your money is going down. So let's just take the example of one currency, and that's a currency that existed around 200 AD. And this is the denarius, the silver coin. In around 180, it had almost 100% silver content, and around 280 it was down to zero. Basically, the denarius lost all of its value. Now, it was no longer a silver coin, it was a coin consisting of copper, zinc, etc. The same has happened throughout history, as I said, in France in the early 1700s, in Zimbabwe in the 1990s, and also in Yugoslavia at the same time, Weimar Republic in Germany in the 1920s, where the value of the wheelbarrow where you transported your money in, that was actually higher than the value of the money in it. Are we going to get to those type of inflation rates again? We don't know, of course. All we know is that we are likely to see a much higher level of inflation than we have now. Let's take a look at the effect of inflation for ordinary people. So the inflation, as I said, is when governments mismanage your money and the value goes down dramatically. And that's happening all the time. Take the example of a house in the US in 1926, 100 years ago. A house at that time cost $6,700. At the time, the gold price was just over $20, so that was 327 ounces of gold. 100 years later, let's have a look. So what's a similar house costing? $514,000. So the house price has gone up 9 times. But let's look at the price of the house in gold. So the house in gold has gone actually down from 327 ounces to 126 ounces. So it actually costs 60% less in real money to buy a house 100 years later. But if you had $6,700 in 1926 and you saved that and you wanted to buy a house in 2026, you wouldn't have got much of a house for $6,000-7,000 when the house price was $514,000. So that's one example of not inflation, but the value of your money going down. So don't believe your government telling you that we've had inflation, because they have created it through their poor management of the economy. I've often talked about that it's totally wrong to measure your wealth in dollars or in euros or in yen, because you're measuring it in something that is going down in value every day. So if the currency goes down in value, it means that your asset looks much more attractive because it looks like the price of your asset has gone up. But it hasn't gone up at all in real terms. It's just gone up in nominal terms because the money is worth a lot less, and therefore you're actually getting less for your money, and your wealth is not as high as you think if you measure it in real terms. I joked and said that if you don't do it in gold, you shouldn't do it in cows, for example. So then I started looking at the price of a cow going back 5,000 years. And interestingly, as we can see in the graph here, a cow has cost between half an ounce and 1 ounce of gold for 5,000 years. Quite remarkable. But it shows you again, you can't manufacture cows. It takes a long time to actually bring up a cow. It's maintained its value throughout history. Of course, you have to keep it and house it or put it out in fields and feed it, etc. But somebody pointed out also in the commentary, one of these graphs I showed about the cow, they said, of course, and then also cow normally has a calf every year, and the cow also produces milk, so you actually get a return on the cow. Now, of course, against that you have costs to feed the cow and to house the cow, etc. But nevertheless, it shows that this is a real value in nature, can't be manufactured in a factory. So, that's why farmers, of course, have a tough time most of the time, but nevertheless, they have real assets and not just paper assets in the bank. So we're going to have 2 devastating events hitting us in the next few years. They have already started, so we're just going to see the end of it. But the end, of course, is going to happen exponentially, which means that your dollar or your euro or your yen is going to go down also at a very fast pace. So your money will become even more worthless than it is now. And remember, as I said, it's gone down by 99% already since 1971. But the final 1% starts now, and of course that 1% fall from now is 100% from here. So that is one disaster that is going to hit ordinary people, and everybody will be affected. Of course, if you have gold, you'll be compensated because the value of gold is going to remain constant as it always has been. Inflation is going to hit everyone, and it's going to hit everyone badly, and especially the people with very little money. They will find it very difficult to keep up with this increase in prices, and therefore they will suffer considerably. If we then look at the people who have assets, stocks, bonds, property, etc., we are seeing a bubble in all these markets. So we have an asset bubble that has been created by all the printed money that really started in 1971 when the gold backing of the dollar ended, and therefore the gold backing of all currencies, which meant that governments could print unlimited amounts of money. You are now going to look at a time when stocks, bonds and property will go down dramatically in price. So if you're heavily borrowed or leveraged, you're going to suffer. So get out of leverage, get out of borrowings against your assets, even against your own house if you can, repay your loans. Let us measure the fall in asset prices against the stock market. Now we have a stock market which is more highly valued than ever in history. One measure that Buffett uses is the stock market to GDP. And you're talking about now stock markets which are almost 2.5 times of GDP, which is historical high, unlikely to be sustained for very long. So we are going to see a crash in stocks as well as in bonds and property, etc. But just look at a chart here of stocks against gold. In 1980, stock prices, as the graph here shows, was about the same as gold, so 1 for 1. So the Dow index was 850 and the gold price was $850. Now that went down to, as I said, 1 in 1980 when gold was very high, and then the following 20 years it went up to about 45. So stocks were much more highly valued then, and gold came down in price. But since around 2000, gold has massively outperformed the Dow. And as the graph shows, we're now down 70% in the US stock market measured in the Dow Jones against gold. So gold has vastly outperformed the Dow. If you add dividends also to the Dow index, it looks a little bit better, but gold has still massively outperformed the stock market. Now this is going to continue in my view. We're now down from 45, the Dow divided by gold was 45 in 2000, and now we're around 12, and in my view we're going to fall to probably 0 or 1. Let's say we go back to 1. So what does that mean? It means that the Dow Jones index will be 10,000 and the value of gold will be $10,000. So 1 for 1. we could also fall further. If we go down to 1, the ratio between the Dow and gold, we go down to 1, it means that it's a fall of more than 90% from here. So that is the amount of value that investors stand to lose in the next few years. It could be 5 years, it could be 10 years. I think it's more likely to be 5 to 7, 8 years than 10 years. So there'll be massive destruction of asset values. And it will be the same in the property market, the same in the bond market, and many other asset markets. The protection is obvious. The protection both for these two calamities that I'm talking about, inflation destroying the value of your money, so it will make it hard for ordinary people to survive, and the destruction of your assets, if you have assets, which will also, as I said, I think asset prices, whether it's bonds or stocks or property, will probably go down as much as 75 to 95% against gold. It's happened before, so it is nothing unusual, but this time it's likely to be bigger because the debt and the bubble is bigger than ever in history. Just to point out what it means to lose 75 or 90% of your asset value. This graph that I show here tells you that if you lost 90%, for example, of the value of your stocks, you have to make 900% gain in your assets to recover the 90% that you have lost. Just realize that. If you lost 90%, the values of your shares have to go up by 900%. So it's something that probably in the next 5-10 years is not going to happen. Asset markets are going to come down to a level where they will not recover quickly. They might take 5, 10, 15 years or more. Remember, in 1929 to 1932, the Dow lost 90% of its value. And it took the Dow 25 years to recover to that same value. 25 years. A lot of people, especially older investors, will not live 25 years later. So that's why don't believe that you're going to recover quickly this time. It's going to be very, very slow, and there can be very tough times because the economy is not going to pick up quickly. The obvious consequences are that you, whether you're just someone with a little bit of savings, or if you're a major investor that thinks that the market always goes up, because it has during a big part of your lifetime as an investor. But the time is now to get out of the coming misery, as Brutus said in his speech, by taking the right current, the right flood. And that is obviously wealth preservation, getting out of these bubble assets, going into wealth protection assets, whether that is gold or silver or even cows. But most people with wealth have the money to buy cows and to buy farmland. But for normal people, it is about buying gold for wealth protection. And of course, you have to have the gold in private safes outside the banking system in safe jurisdictions like we have in Switzerland, Mountain Vault in Switzerland, or in Singapore, a normal vault. Because if you don't protect yourself now, you will really end up in miseries. And those miseries are going to mean that you will have difficulties surviving in the coming 10 years or so. So please, please protect your wealth. Start preserving your wealth, buying or holding gold and silver in a very safe way. Thank you very much.